morning, guys.
Good morning.
Good morning.
Earnings season is officially underway. Can't promise you'll make money, but it'll be interesting. There's a couple things we're going to go over today. First of all, futures are indicating up a little. Hope they stay up. I'd like them up a little more than Eve would like them up, but I hope they stay up, 3 to 5 handles, because I'd like to use that as a point to, to get some inventory off the open short. I think that what they're going to do is you had some very good earnings from companies, and last night Apple was through the roof, hit 205 even on its high. We're saying, after I was trading it. The only thing is as things start to come out this morning, it is a buy in the rumor, sell in the news type of situation on a lot of these stocks. Not necessarily in Apple, but it is with a lot of companies that are coming out now, and with the overall market. PPI did not come out, good. So it's looking like there might be inflation coming, which means interest rates would have to be raised. There's a whole bunch of things that are going to come that are going to factor in. So let's talk about the earnings play a little. There are 2 ways to trade earnings: when it's happening, and after the market's actually opened. Okay? So let's talk about when it's happening. When earnings themselves are coming out, the best thing that you can do with earnings is react to the overreaction. Right? We always see stocks. Stocks are like a pendulum in different ways. They swing and they swing, but they always overswing. Whatever they're doing, they always overswing in one direction, and sometimes they overswing back in the other direction. But they always take a move too far, whatever way they're going. So what we want you to do when you're watching these earnings plays is look for the overreaction, right? That's when you look for the market extend and extend and extend, and when you don't think it can extend anymore, it extends just a little more, and it's sitting there trying to go, and it can't. And when it can't make that last leg, that's when you want to really jump in on the opposite side, right? You can keep your stops fairly tight, but you want to jump on the opposite side, and what you'll see then is a very nice retracement, generally giving you a good way to make good money. It's not a long-term trade. You're not expecting this to cause the stocks to reverse in any way, shape, or form. You're going the opposite direction, usually of strong stocks if you're shorting, or weak stocks if you're buying. You're expecting it for a move, be it a half a point, a point. They're quick moves, very quick, all right? But it's instant gratification, and it's usually a very, very solid trade when you get that overextension. So that's number one. The second move is, how do you trade it throughout the day? So the reason why people like earnings season, and why earnings season is interesting, is number one is it's much easier to find the stocks that are going to be in play. If it's a random Tuesday, not during earnings season, you have no idea that IBM is going to be an in-play stock necessarily off the open. If there's no real news, if there's nothing else, you've got to find it, you've got to see what's going on. On the earnings plays, you know it beforehand. So you know that you can pull out a whole bunch of these stocks, number one. Number two is there are a couple of what we'll call very easy trades when it comes to these earnings plays, which is expectation of one thing, reaction of another. So let's say you've got a stock that's up $1 pre-market. Earnings were strong, everything looks good. Stock opens up, $1.75, does a little tick up, starts to go down. When that stock starts breaking down and breaks through its open, it's done, it's weak. You could expect that whatever is causing, the reaction that we're having, the market didn't like the earnings, or everyone's using it as a point to sell on the news. So you've got trades like that where they're just a giveaway, right? They were strong, or expectations very strong. The stock is weak. It's going to keep going. It's going to go right through it. It's going to be like butter. It's really just going to die. The other thing is look for the reaction of the unexpected. Right? That's Lockheed Martin this morning. Lockheed Martin this morning seemed to have beaten earnings by a few cents. Was trading up $1 and change pre-market, and PPI came in. Everything I was looking before. I don't know where it's trading right now. It was down $5. Wow. Okay. So number one is I'll tell you LMT is going to be in play. It's going to have movement today, no doubt. But more importantly, it's the unexpected, and obviously that one might already have the move into it.
Is that a conference call maybe?
Maybe. You might have to move into it. I didn't look. Or the move might be there already, but it's the unexpected. What happens if DuPont, they're talking about DuPont right now on TV for a second, DuPont had very good numbers. It looked good. DuPont, potash had followed through overnight. DuPont looked like it was trading up about $1.20, $1.30, which for a stock that doesn't move anything like that, that's a real move, right? Now if DuPont doesn't react the way it's expected, and the stock pulls in, right? Opens up flat, starts looking, that stock's going to get killed. if it can't start making, you know, its way back up initially. That stock's not going to have the buyers come in, it's going to have the sellers come in. And that's one of the things, it's a little more evident during earnings season than it is in a random week. So, you know, today's day to trade. I'm not telling you the market's going to be up, I'm not telling you the market's going to be down. He's going to discuss with you what he thinks the market movement's going to be today. I'm telling you that these plays are the ones you want to be looking at. There are, I don't know, about 20, 25 good earnings plays that are out there today. See how many of them you can look at that you're going to like, and let's see if we can make some money.